Hello, Gary Tables. So today we'll be doing a cash flow statement. So now we are provided with information relates to Rendison Blue Limited, a public company for the financial year ended 28 February 20. So your financial period ends on 28 February 2023, right? Now, so you need to prepare the ordinary share capital note to the balance sheet on the 28th of February 2023, right? So now we are given an extract from your balance sheet. So we have 2023. So we have 2023 as our balance at the end, right? So this is at the end, right? And then we have our balances on 22, which is these are balances at the beginning. Right. Now, ordinary share capital. So at the beginning, our ordinary share capital was what? Was a question mark. It means it's our balancing figure. Therefore, we have our ordinary share capital at the end amounted to 2,371,500. Right. So now here we will put that 2,371,000. Remember, it's our balance at the end. So now, as issued at the end, you will put that amount of 2,371,500. So when we check information C, you have the share capital. So the business has been registered with an authorized share capital of 800,000 shares. However, on 1st March 2022, meaning at the beginning, the company share capital consisted of 184,875. So it means our ordinary share capital at the beginning or shares issued at the beginning was 187. So it's 187,875 as our shares at the back. However, on 30 November 2022, so you decided to repurchase 12,000 ordinary share from a retired shareholder, which those shares are given at a total cost of 60,000. So now, it means after issuing at the beginning, you decided to buy back, you decided to repurchase. So you decided to repurchase 12,000. So it's gonna be 12,000 shares, right? And then remember on buyback, remember we had 12,000 shares, right? These are our shares, right? Therefore, the total cost of these shares amounted to 60,000. So now our total cost, we have the following. We have our average price, and then we also have our what? Above average. So now that we are doing ordinary share capital consists of our average price. So this will be note number 7, and then above average will be your retained income, which is note number 8. So now you need to calculate your average price. But before calculating average price, on 31st January 2023, 280,000 ordinary shares are in issue at 6 Rand per share. So now we have 280,000, meaning shares, additional shares at 6 Rand. Then when we multiply, our value would be 1,680,000. Right. Okay. So our value at the beginning here. So we have shareholders equity, and then we also have our retained income. So remember, ordinary share capital plus retained income is equals to shareholders' equity. So now we have our 807,500 as shareholders' equity, right? Remember, shareholders' equity consists of note number 7 and note number 8, right? So remember, our ordinary share capital at the beginning was our balancing figure. You are given or you were told that retained income is 68,000, right? So it means that 807,500, you have an amount of 68,000 and an amount of unknown and ordinary share capital. So now you will take that 807,500, therefore you subtract 68,000. So meaning our ordinary share capital at the beginning, it's going to be 739,500. So now we have our value at the back, which is 739,500. Right. So now you can calculate your average price. So remember, our average price, it's what? It's value of shares. So it's value of shares divided by what? By number of shares issued, right? So now the value of shares issued at the beginning, we had 739,500. Then you divide by 187,875. So it means our average price, it's going to be 4 rand. So now we have our average price of 4 rand. Therefore, you multiply 12,000 multiplied by 4. So it means it's going to be 48,000 as our value of buyback. Therefore, our ordinary share capital at the end consists of 452 and 875, right? So it's 472,875. So now, when you do your financing activity, the only amount that will be transferred under financing activity will be this shares issued during. So we will take 1,680,000 as our proceeds from shares issued. Right. So now we need to do our 2.2, which is prepare the following or prepare the cash flow statement for the year ended 28 February 2023. All right. Okay, so now we need to do our cash flow statement. So our first activity will be, so it's operating activity, right? So now under operating activity, remember we have our cash generated, and then we also have our what? Interest. So it's interest paid. Then we have our, right, we have our dividends paid. And then we have our what? Taxation paid. Right. And then, so now when you check extract from your income statement, you have the interest expense. So that interest expense will be classified as our interest paid here. So we have an amount of 78,750, right? And then we have these two as outflows. Okay. So now dividends. So dividends, how then do you calculate your dividends paid? So we have our dividends at the beginning. You to shareholders for dividends at the back, which is 175,000. But before you do that, you have total dividends paid for the current financial year amounted to 480,000. Okay, so remember, our total dividends consist of interim and final, right? So now total dividends paid, that 480,000, it's total paid. It's total dividends paid. So it means now you have our final answer of 480,000 as our dividends paid. Remember, it's total dividends. What paid? It's an outflow. So dividends, it's now sorted, meaning has been calculated for you as your final answer. However, taxation paid. So now our taxation paid at the beginning, our SARS, we were told that our SARS, it's what? It's on the credit side. So meaning you owe SARS an amount of 32,400, right? Remember, income tax, always you subtract to income tax. So income tax amounted to 374,600, right? Therefore, we have our what? Balance at the end, it's debited. So we will subtract our 48,100. The reason why we are subtracting 48,100, it's because that 48,100 has been paid to SARS. So this amount stands for paid. So meaning our total for taxation paid, it's gonna be 455,100. Right. So now cash generated, it's given on our answer book. So the amount will be 1,172,600. Right. As for our total, so our total operating activity will be 158,750. Right. So remember, when you do your taxation paid, another way of doing taxation paid, it's a ledger, right? So now you have SARS as a ledger, right? Remember, our balance at the beginning was on the credit side. So we have our balance brought down, amounted to 32,400, right? Therefore, remember, always our income tax, it's on the credit side because it's a liability. Therefore, our income tax was given as 374,600, right? Therefore, as for our balance at the end, so our balance at the end was on the debit side. Before transferring that amount to the debit side, you first do what? Uh, Check this. So meaning that balance will be here first as balance carried down, which is 48,100, right? And then you have our equal sign, our equal sign. Thereafter, you transfer that balance here where it belongs, which is on the debit side. So it's going to be 48,100. So now our total here add the two, add the two, add the two, meaning our total will be 455,100 as what? Taxation paid. Right. So yes, this is another way of doing our taxation paid in a form of a ledger. So now we have our operating activity final answer of 158,700 and what? And 50. Right. And then after, okay, now we will move to our cash effects from investing activity. So now, so it's gonna be cash from investing activity, right? So what are you investing in accounting? Now, number one, our assets. So it's either you purchase an asset or you do what? Or you dispose an asset. So it's sale of asset, right? And then you have what? Your fixed what? Deposit. So we have your fixed deposit here. Okay. Now, how do we then calculate the following terms? So now fixed asset. So building plot was sold during the year amounted to 745,000. So we have an inflow of 475,000. Remember, purchase in accounting, it's money out. So meaning our purchase of an asset, it's going to be an outflow, right? Then before calculating purchase of assets, we need to check our fixed deposit, whether it increased or it decreased. So when you check information P, you have the investment in fixed deposit. So at the beginning, our fixed deposit was 330,000. However, our fixed deposit on 2023 was 80,000. So it means now your fixed deposit decided to decrease. So it's gonna be 330,000 minus 80,000. So whenever if your fixed deposit decreases, it's an inflow. So it means fixed deposit matured. So meaning our fixed deposit matured, it's gonna be 250. So it's 250,000. So we have our fixed deposit matured of 250,000. So now you need to calculate your purchase of asset. Remember, our purchase of asset, you have carrying value at the beginning, additions at cost, then disposal, depreciation, then after it's what? It's carrying value at the end. Okay, so our carrying value at the beginning, it's given here, which is we have fixed tangible asset at the beginning was 2,937,600. Then at the end was 1,928,600, right? Then our depreciation is in brackets as well as our disposal. So now depreciation it's given here on your income statement, which is 56,000, right? Remember, disposal, you had sold a portion of your building amounted to 475,000. So it's gonna be 475,000. So now information E, equipment was purchased during the year. So remember our additions at cost, we don't know. So you need to calculate your additions at cost. How then do you calculate these additions at cost? It's carrying value at the beginning. You add your depreciation, right? You also add your disposal, and thereafter you subtract carrying value at the beginning. So now it means that our additions at cost will be 478,000. So it's 478,000. So now our total for investing activity, it's 247,000, right? So remember to show the calculation here. Because of the space, I won't be able to show these calculation, right? So now our cash effect from investing activity, our final answer, it's 247,000. So now we move to our financing activity, right? So it's cash effect from where? Financing act, right? What is financing accounting? Number one, it's shares. So it's gonna be proceeds. Proceeds from who or from where? shares what issued when during, right? So now again it's what? It's buyback of what? Shares in full. Remember, you record the total amount or total cost. Thereafter, you will have your what? Your loan. It's loan or non-current liabilities. Right. So remember, when we do our ordinary share capital, we had an amount of 1,680,000 shares issued during. The value of these shares was 1,680,000. However, in information C, 12,000 shares were repurchased from a retired shareholder at 60,000 as our total cost. So now you will record 60,000 here as our total cost. And then you check your non-current liabilities under balance sheet section. So now we have our long-term liabilities. Our long-term liabilities, it's what? It's a loan, right? Therefore, loan at the beginning was 940,000. Therefore, at the end was 125,000. So show your calculations at first. So it's 940,000. You subtract 125,000, right? So now it means our loan decided to do what? To decrease. So a decrease in your loan, it's an outflow. So meaning our final answer will be bracketed. You took money in your bank account to pay your future debts or maybe your current debts. So if your loan decided to decrease, it's money out. Therefore, when you subtract these two, we will have an amount of 815,000. So now we have 815,000 as our outflow on loan. Therefore, meaning our total total financing activities, when you combine all these amount, will be positive 805,000. Right. So now our last step is for us to calculate our net change. So it's net change in cash and cash equivalents. So we have cash equivalent at beginning. Then we have cash equivalent at end. So now open brackets. So our cash and cash equivalent. So if you're not given this petty cash float, savings account, you look your bank, which is now we have our bank in brackets. It's what? It's favorable. So at the beginning, our bank was 2,000, right? At the end, it's what? It was a balancing figure. Okay, that's new. So our Lentuza, it's balancing figure, right? Therefore, you check your what? Bank overdraft. So now bank overdraft was 922,000 at the beginning. So now you will subtract 922,000, right? So when you subtract these two, you will have an outflow of 920,000, right? Okay. So now cash and cash equivalents. How do you calculate cash and cash equivalent without these two? So remember our operating activity, we had an amount of 158 750, right? And then our investing activity was an outflow of 478,000. Then our last activity, which is the financing activity, we had an amount of 805,000, right? So you will take this, right? You subtract this, and then you add that. So meaning here, when you do this calculation, you will have an amount of 1,210,750 as our net change in cash and cash equivalents. So here, our net change, it's 1,210,750 here, right? Therefore, remember our cash and cash equivalents at the beginning was a balancing figure. So you will take this 1 million, you subtract your 920,000. So now our balance at the end will be 290,750, right? So now you have your total cash flow completed as an easy topic.